Good afternoon, everybody. It's December 9th, Tuesday. Tomorrow we have our Fed Day. So I'm going to be sharing with you some of the expected moves, what's expected, but public service announcement. I will be going live tomorrow. So if you are around and want to see a live trading session while the Fed is going through the interest rate decision and the press conference, be sure to subscribe to the Stock Market Report and hit that bell notification because I'll be live on YouTube, Twitch, and X. We're going to get right into it today. We're going to start off looking at, well, what are the probabilities that the Fed is going to cut rates? And right now we have about an 88% probability, 89% probability, 80 whatever percent probability that we're getting that 25 basis point cut. So that looks like it is on deck. So what would be outside of market expectations? Well, a 50 basis point cut and or no cut at all. That would be, and obviously a rate increase. That would be quite shocking. So what is the market expecting as far as a risk going into tomorrow? We're looking at about a $46 expected move in the S&P 500. That's plus or minus, and we have a 1 standard deviation of risk right here, which will give you your upper levels, lower levels, and also your 2 sigma levels, because during the press conference, Jerome Powell may say something that shakes the market, that creates more volatility. But as it stands right now, this is what the market's pricing in for all of these various assets. If you want to mark these levels on your screen, please do so. We've had some interesting stuff now. I want to kind of hop into some of the charts that have been doing good leading up to this event and some that haven't. And technology sector, XLK, which is heavily ran by NVIDIA and obviously other tech stocks, because it's a technology sector, but also semiconductors, right, make up a huge percentage of this XLK. So I'll get into that. But you can see XLK was up 12 days in a row. It's been basically a straight line up. There's been one time throughout history that it was higher than that, and that was 13 days up. You can see that right over here. And then you have to go back prior to that to like 2008, 2009-ish to see the last time where we had 12 days in a row. I found that Subutrade looked at this same exact type of setup, but he pointed out some statistics showing what price did in XLK 1 week, 2 week, 1 month or so later, which is somewhat could be useful to an extent, but overall we got to trade our price action. And what I like to look at is, okay, if technology has been rising these last 12 days up, has there been any big negative correlations to other various sectors? And this is what I found. Technology, right? On this recent run up in technology, just going higher and higher, there was that sell-off, and this sell-off, right, created a rotation into various assets. And one of those ended up being healthcare. And if you look at healthcare down here, they were kind of moving hand in hand, going up. But this final burst of movement to the upside from basically 144 to 158 came at the back of, you can see technology kind of taking a big breather. And then since people started stepping back into technology, they started reducing these positions, rotating outside of healthcare. You can look at something like utilities down here, and you can see the last few trading sessions, utilities going down as technology is going up. And you could also see something like consumer staples, more safety type assets versus XLK, where XLK was going up, consumer staples down, and then so forth. You can see in recent trade, consumer staples has been coming in, and technology obviously has been higher. Now, if I put this all together into a rotation graph here, you can see that this big move in technology, this long tail, these last 5 trading days over here, what do you see that's kind of matching that? Well, you have this big long tail in utilities going to the lagging quadrant, and you have this big long tail over here from XLV moving from a leading quadrant into the weakening quadrant. So one might think is, if XLK starts to take a breather in this Fed meeting, right, we can see these potentially people start to rotate back in to assets like this. Now, we don't know what the Fed's going to say or what the Fed's going to do. For all we know, it could bring technology and it could lift all sectors, or it could potentially hurt all sectors. However, if it hurts all sectors, perhaps technology is the one that's hurt more, and healthcare, utilities, and stuff like this is more relatively strong, even if it is going down relative to technology. Okay, now I want to bring up semiconductors, and you can see semiconductors also been on this big run up, which obviously helps technology sector. It helps the Qs, right? The Qs, a huge percentage of the Qs goes into the semiconductor index, but we're still well within the weekly implied move. We have 378 to the upside, 350 to the downside, and you can see over here, we've been kind of just going higher, and we're above that 5-day moving average as it stands right now. That is inclining. However, things are kind of, as this is going higher, we have an RSI that's kind of diverging. So we'll see what type of volatility the Fed brings in. Now, as this has been taking place in semiconductors, take a look at healthcare. Now, healthcare reached into its lower weekly implied move today, and you can see it zoomed in here on the 30-minute time frame. Now, I anchored a volume weighted average price to this prior low before the October really started picking up to the upside. So if healthcare wants to continue to come down, I'd be paying attention to this 148 and right in within this area, right? So if you were looking to buy this move and you missed it, these are the type of pullbacks that you want to look for, because overall, what are we seeing? Well, we're still seeing higher lows as it stands. And this right here could be an area of interest because it's acted as an area of interest in previous trading sessions. Okay, so we're currently outside of that weekly implied move, which could be a good area to start to accumulate if you were looking to buy the dip in various healthcare stocks, and or you can wait to see if we can come down to that lower VWAP and see how price reacts in and around those areas. From an intermarket standpoint, some interesting things have been happening. The 10-year yield has been kind of moving higher, which is one of the things that we kind of mapped out in the last couple of videos. But this is taking place while oil is actually breaking down, and oil coming off could be an indication that this is going to come off and consolidate as well. Typically, when you have falling oil prices, it's good for bonds, but yet they're kind of diverging, right? So if you look through this chart, oil and the 10-year yield, they kind of move together. So is oil leading the charge here on the 10-year yield? Well, interestingly enough, as oil's coming off, you're still seeing energy stocks actually perform quite well these last few trading sessions. If you take a look at oil right now, it's in overall downtrend, declining 50, declining 200, and a series of lower highs, and only up until recently we had a higher low. 10-year yield, you can see, has been on a pretty strong run to the upside, and these typically do get consolidation. So those are a couple of assets that I would say pay very close attention to during the Fed meeting tomorrow, right, on the live stream or not. If you're on the live stream, pay attention to them, because these assets have the ability to obviously affect markets, both positively and negatively. All right, we'll look at some of the signal charts. We'll start off with the sentiment index. We got a 61.8 reading, rather neutral. These are the times that we've gotten 61.8 readings that are greater than 61.8. And you can see there's not really much you can do with a reading that's at this level. You can get clusters and then consolidations. That happens all the time. Or after big dips, then you can get constant readings with some consolidations. But overall, not overly extremely greedy, bullish, or extremely bearish by any means. We take a look at breadth right now, the percent of stocks above the 20-day, 50-day, 200-day, and the S&P 500. These have been kind of coming off for a minute here, and the S&P 500 is a stone's throw away from new all-time highs. Sailor to shift tool started to see some action towards the upside. It's not on a buy signal, buy trigger officially yet, but when we were down here at these levels, we were talking about how that rate of change we haven't seen for quite some time, right over here in July, and then you have to go back even further, and that's marked off temporary bottom. So today we saw a nice little bounce relative to gold in Bitcoin, in Ethereum, Solana, and other crypto equities, and even crypto assets there, and then also crypto equities such as like Cypher, right? We saw that one setting up, which we talked on our last live stream, and something like Wolf maybe. Some of those assets, you got to pull up what looks good. Hut, there's a couple of them that have been setting up for a minute now while the price action of Bitcoin has been kind of coming off. All right, let's look at the market conditions. So going into tomorrow, SPX expected move to the upside, 6887, and that's not too far off that 6900, right? And this happens to be a pretty substantial gamma exposure level. So if the market likes what it sees, I feel like up in these ranges could be a definite possibility to go and tag and go test that 6,900. If we start to see more downside in the market, I would be paying attention to obviously the lower daily EM and then obviously the lower weekly implied move on the SPX. Overall, if you look at SPYs, Qs, IWM, semiconductors, biotech, and DIA on their 30-minute timeframes and their 5-day moving averages, the SPY has been basically going nowhere, which is in a tight range. It is yellow, meaning the 5-day moving average is trending up, but price action is below it, and everything else is basically green other than biotech, right, below, but it's still inclining, and then the Dow Jones Industrial Average as well. If we look at some positioning into tomorrow's trading session, we'll look at SPY gamma exposure. We do have a couple levels of interest, such as 677 and 685 right here. And we're basically right under this green bar. So if we pull this up on the chart, we also have a dark pool level here at 682.39. So let's put these levels on the chart so you can get an idea of what it looks like for tomorrow's trading session. So the larger gamma exposure level, right, this level is at 683. So if we start to give way in this little area between the dark pool and the gamma exposure level, this opens the door to that lower GEX level at 681, which would be this level right here, which is the second largest area of concentration for tomorrow's trading session. So if we start to break down through this range here, this opens the door to that larger exposure, this red level, and that's 677, and that's by the lower daily implied moves. Now, if we can hold 683, hold this dark bull print, the upper level would be 685. And from an aggregate perspective and even a daily perspective, that's a pretty large level. In fact, from an aggregate perspective, if I looked at the total, it's the largest level. So if price action starts to say break above this kind of downwards trend and we hold above, I would be targeting 685 into and around that 686. Then depending on whatever the Fed says, obviously we can drive price higher from that. It's going to be important to watch market net flow while this is all taking place. We're going to hop into some mega cap stocks now because I want to share with you where we stand within the weekly implied moves with these so you can mark them on your charts. This is NVIDIA. We're going to have the daily chart on our left. We're going to have the 30-minute time frame with the 5-day moving average on our right-hand side. And you can see that NVIDIA came into its all-time high VWAP and we've been kind of trading within this tighter range. It is above a 5-day moving average. You can see 190.51, 174.31 if you want to mark those on your chart. If you come over to Apple, Apple saw a nice big move and now it's pulling down slightly down on the week. This one is below a declining 5-day moving average, so it's not as strong as the prior. If you take a look at Google, Google has been rather choppy. If you look over here at the 30-minute time frame, no weekly implied move tag, but we did get very close to tagging it. Now, if we start to break underneath it, I anchored a volume weighted average price just below that. So in and around these areas can become potential opportunities to play back up. If we take a look at Microsoft, Microsoft is above a 5-day moving average as it stands right now, and it's been building higher lows. Looks pretty bullish, and it looks like it's getting ready to at least go test this upper expected move at 494. I'm just going to call it 495. And if we continue through this, that looks like it can test the all-time high volume weighted average price here on Microsoft, which is roughly at about that 500. Amazon is below a declining 5-day moving average. You can see over here this all-time high VWAP, or this more recent VWAP. I have to look to see if it's the all-time high VWAP. I'm not 100%, but you can see we kind of ran into it right over here and backed off a little bit after this initial bump higher. And now we're rather unchanged on the week. So if the market wants to move higher, perhaps into and around 235 to 236 into that range. And if it starts to break down from today's low, right, as we are kind of below the declining 5-day moving average, it opens the door to 222.17. If we take a look at Tesla, it's above its VWAP from over here. We almost came down to the lower weekly implied move. We still have some pretty strong price action as far as the 5-day moving average goes, but we're kind of currently just trading right below that inclining 5-day moving average. So perhaps if we start to come up and tighten up within this area, maybe consolidate or maybe pull in, consolidate a little bit more, that can set us up for a nice big run up to here. It is overall from a daily perspective, if you zoom out, or even a weekly perspective, in like a larger consolidation, and overall not looking all too bad. It does look like it's a stone's throw away from a new all-time high, and we haven't hit that 500 yet. It seems like a psychological level that the market probably would want to try out. If we take a look at AVGO, this is one of the semiconductors that has been a very strong performer. We're not there quite yet at the upper implied move for the week at 421.66. We're above a rising 5-day moving average. Price action looks pretty strong overall. Semiconductors in a whole, right? Overall, as we talked about earlier in this episode, they're getting pretty frothy. You're gonna need some consolidations, whether that's after the Fed or maybe leading into the Fed where we get a pullback or slightly thereafter. We shall find out. But these are the levels you want to kind of watch and pay attention to below us and above us for price action to reach. Now, Meta did come just about and tag its lower weekly implied move. The 5-day moving average is inclining as price is still below it. So we want to recoup this level to maybe see a gap fill over here and potentially head higher. You can see this VWAP from this high. We did break above it. So anything in this range can potentially still be just a consolidation from an overall nice bounce from this happens to be last year's closing price right here. We saw it bounce. Now we're just getting some consolidation, potentially leading this higher into year end. And that's all I got for you on today's episode. Hope it helps out. I'll see you on the next.